and good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. For now, it doesn't seem to be a good afternoon if you're a bull because the market continued to be under acute pressure. In fact, we are at the lowest point of the trading session. At one point of time, we did go below the mark of 24,600. We're still below that mark. 5,582 is where we are at. The recent low for the Nifty was around 24,560 thereabouts. So we are less than 10 to 20 points away from that mark. The last low, of course, was around 18th September. If we do go lower, we'll perhaps breach the recent low on the market itself. So definitely precariously poised as far as the market mood is concerned right now. It's the broader markets which are seeing deeper cuts. So that's the bit to talk about. If you look at the mid-cap and the small-cap indices, they are deep in the red right now. Cut off anywhere between 2 to 3.5%, and that's the reason the portfolio level pressure is even more acute. Sectorally speaking, it's real estate which is under pressure. PSU names like defense and banks are under pressure. Even the metals as a pack are bleeding away in the trading session today. In terms of the earnings impact, it's City Union Bank, which is doing very well for itself. Upgrades coming in from the likes of MK. Mahindra Logistics is in focus on account of narrowing of the losses. Plus, of course, Varun Beverages, wherein the volume growth came in at close to 5.7%, is also doing well in the trading session. If you look at the market construct, all the sectors are in red right now. The advance decline ratio is fairly muted. In fact, a lot of stocks are actually favoring the declines versus the advances, and that pie will come up for you on the screen. It will be a lot more red versus green. There you have it. 2,400 stocks almost declining for 220 advancing. So very negatively skewed, and as a result of all of this, the MSC market cap erosion is 6 lakh crore that we have seen today itself, and that's the kind of pressure and carnage that we have seen as far as the broader markets is concerned. It is the broader market weakness which is the biggest talking point. So let me just start with that and welcome on board Naresh Mirani on the show. Sampath Reddy also joins us to talk to us about the fundamentals. Naresh, I wanted to begin the conversation by asking you, the recent low that we saw on the Nifty is getting threatened today. If we do breach that mark, where next can we find support?
So starting off with Nifty, if we look at it, the lows of July, August were roughly around this 23,950 to 24,000 mark. There was a cluster of lows around that area. There was also the gap down opening which happened, and it held on around those areas. That remains the most crucial support for the medium to longer term trend. Same way, we've a similar level comes for the Nifty Small 100, etc. Say 2-3% away from current prices.
So that's a trend in the markets right now. But Naresh, a follow up there. Do you expect the broader market weakening to worsen from here on?
So we are just testing the supports on the small cap and the mid cap indices. Say a couple of days back, Nifty made a bottom around this 24,600 mark. So an intraday recovery. We are finally coming in that zone as of now. But there are multiple of supports, say, in this band. So if I were to look at the Nifty small cap 100, we are at 18,100, 200. You have a bunch of supports at around 17,500 to 18,000. So that area could be tested. So that could be another 2-3% from here on before it takes a little bit of a pause. It's only when we break below those levels, then we start looking at the medium-term trend.
Take it. Sampath Reddy also joins us on the show. He's, of course, the founder and fund manager at Azurin Investment Manager. Sampath, hi, good to be speaking with you. Well, I'm guessing the portfolio is not looking a very pretty picture right now. And in fact, if you can, perhaps one should stay away from looking at the portfolios today with the kind of weakness that we are seeing. But do you expect this to be only a transient issue, or the next couple of weeks and months are going to be full of turmoil and volatility for individual investors?
I think the way the markets have moved up over the last few years, I think the overall valuations are on the higher side. Especially more so in the mid cap and small cap segment where the valuations are much more steep. Because of which I think there could be a subduedness in the market overall for the in the very near term. And even if you were to look at the quarterly numbers of the Q2, most other places the numbers are coming slightly below expectations. I think barring the companies which are exposed towards the capital markets, such as let's say asset management companies or brokerage companies, or companies like which are exposed to wealth management, etc. Barring these kind of companies, most other spaces the growth rates have been quite weak. Earnings growth has been quite weak. Even IT, which was nothing to do with the domestic side of the demand side, even there also the earnings growth have also been relatively muted. So overall, with the steep growth in the earnings that we had seen in the last several quarters, I think that is getting decelerated. So because of which overall, I think the valuation premium that we used to enjoy vis-a-vis most other global markets and is slightly getting compressed. So because of which I think we could see a subdued trend in the market for some more time, more so in the mid cap and small cap segment.
Markets now on intraday basis at a 2-month low actually. And Kunal, do you foresee this actually downtick continuing going ahead? Because it's been a while that we've been in this range and now it looks like the fall has just accelerated.
Yeah, I think the fall is continuing for the markets, and we've been in this tone in the last 2-3 weeks broadly. I think from September 26th, 27th onwards is where we've seen the market texture being much more negative. This is the 4th consecutive week, if I'm not wrong, where you've seen the index movement on the downside. Historically, I think when we looked at the last 20 years of data approximately for the index, there have been only 2 or 3 instances where the extent of correction has extended more than 5 weeks for the index. So maybe I think we could be probably entering a zone where the markets are getting into that final leg of correction. Today, in terms of a breakdown, yes, the indices have managed to break below that 24,750 mark, which we've been mentioning over the last 1 to 2 weeks, and that's a major support. And if we fall below that major support, then we could be looking at the index, maybe continuing the downward trend. So I think the only solace over here for the markets is the outperformance which is coming out from the individual private sector banking names, not Bank Nifty as such on an overall basis. But over the last 3-4 days, we've seen gap up openings for HDFC Bank, Axis Bank, City Union Bank today, and some strong performances from ICICI Bank. So I think in that context, maybe the private sector banking stocks, few of them, they could stand to outperform. But overall, I believe if we've closed below this 24,750 mark today, we could be expecting the markets to continue the selling pressure at least for the next couple of days.
Right. Let's talk about the recently listed counter, or the one that is listed today on the bourses, that is Hyundai Motor India. If you look at the stock, it's under pressure now. It is down in excess of about 6% or so. 7% is the downtick that this particular counter is actually noticing. And Sampath, have you actually covered this particular stock while you were actually trying to understand or analyze the IPO of Hyundai India?
No, we have not really looked at that. We are just in the midst of fundraising, and we are busy with those activities. But overall, to speak, in terms of valuations as such, even in the automobile side, the overall growth rates are slowing down, especially in the passenger car side. Inventory buildup has been quite large. So because of which, I think even automobile as a sector facing through a little bit of a slowdown. So because of that, I guess the markets are a little bit weak, bit of a weak.
In fact, the auto sector has been seeing some sort of a slowdown over the last 4 to 5 months or so. In fact, we spoke to the management right after their listing to understand about the outlook going ahead, and they seem to be pretty optimistic when you talk about the SUV market as well as their new Creta EV that they are looking to launch. Let's hear out from the management itself.
Creta EV is going to be launched in the next quarter, followed by 3 more EVs in the mass and the mass premium segment. This EV plan is being, also being backed by a very strong localization. So as we speak today, the battery packs are being localized in Tamil Nadu. Going forward, we are looking at LFP cell manufacturing with a local Indian partner. We are looking at powertrain, drivetrain and power electronics as well. Also the charging infrastructure. So which will again be a growth driver moving forward. At the Q1 financial year 24-25, which are already a part of the RHP, already include the higher royalty rate. So I think this is something which I just want to clarify. So Q1 financial year 24-25, which is April to June period, financial year 24-25, it includes the higher royalty rate.
All right, so you have the management talking about the fact of the demand, how the demand is looking like. Also, he also touched upon the royalty that the company pays to the parent. But coming to you actually, Naresh, and trying to understand what exactly is happening when you talk about the real estate sector, because for a while now, the sector has actually been underperforming. In the last 1 month also, the sector has not been doing that great. Today, it's down about 3.6%. Where do you think the realty sector is headed from here on? And are you finding any safe pockets in that particular space?
So over the last 2 years, the sector has done really well. We've gone through a phase of consolidation in some of the names, and some of the names are topping out. So out here, it's too early to call the bottom. So something like a DLF might just be breaking below 800, and then it creates a bigger downtrend. So out here, would wait out, let the correction get over, and then maybe look at real estate because they're high beta names. So once the Nifty bottoms out, then maybe one can look at real estate sector. And this has been a sector which has done really well for the last 2 years. And we've seen in the current correction, the sectors which have done really well in the last 2 years have taken the largest hit. So would wait out for a deeper correction to actually participate.
All right, so that's the view coming in on the real estate sector. No doubt that particular sector has done well over the last 2 years. Talking about the markets, we are at the day's lowest point. Only 4 stocks on the Nifty that are in the positive territory, and it is the ICICI Bank, Nestle, Ultratech, as well as Infosys. On that note, we'll slip into a break on this edition of Closing Trades. But stay tuned, we'll be back with more market action. Don't go anywhere.
Welcome back. Well, the market mood continues to be a bit sour, though we have managed to retrace the mark of just around that 25,000. Actually, no, we are still at 24,557 as far as the market is concerned. So a fresh 2-month low is what we have made for ourselves, and there's no buying in sight. As of now, we continue to drift lower. Sampath, what would be that trigger that will make even FIIs and even those retail and the HNIs to come back into the market? Is it just the valuations that need to correct, and that time-wise correction is something that we'll have to suffer through? Or is it about earnings or something else?
Yeah, as I was mentioning, I think earnings also for the slightly coming quite weaker in the Q2, barring few sectors. Most of the places, earnings are coming below expectation. In fact, some of the the BFSI space where the earnings were supposed to be quite robust, there also there's been a slight disappointment. Overall, I think earnings is coming as a bit of a disappointment. On the other hand, the valuations are also quite stretched. So because of these two factors, I think we are seeing this correction, and moreover, this time is coinciding with the large amount of fundraising, whether it is from the IPOs or whether it is from the QIP and FPOs. All of them taking together is absorbing a lot of liquidity from the market. All of these three factors taking together, I think is leading to some kind of a correction, which is what we are witnessing today. Probably this trend could can continue for maybe a couple of quarters more. By the time we could see the either earnings bottoming out and coming back in a growth accelerating mode, or by that time some amount of time correction would have taken place such that valuation look better. I think all of these factors taking together, we could see revival in the market slightly closer to the end of this financial year.
Right. Sampath, I wanted to actually come back to you and try and understand which space or the pockets in the market that are looking safe at this point in time, given the fact that you're seeing carnage across the board. Like you said, the earnings are also disappointed, and that also is weighing on the markets. So any pockets that you're finding safe at this point in time, apart from the ones that are linked to the markets?
This last 2-3 year bull market, I think most of the sectors have participated in this rally. It's pretty much one of the broadest rally that we had seen in the last several years, I would say. So because of that, almost most of the sectors are trading at a quite richly valued. But if you see there are still a few pockets where you could find value. I think the private banks, they have not really, gone up so much in the last few years, and also the earnings have grown, book values have grown in the last couple of years, and they have broadly underperformed. I think barring ICICI Bank, most of the private sector banks have, had a subdued performance in the last 1 to 2 years. I think that space looks relatively more attractive private banks. Apart from that, I think pharmaceuticals as such is also looking quite attractive, especially the generic pharmaceutical exporters, where the pricing pressure are easing now. I think that segment is also looking good. In the consumer, I think the QSR as a sector has been facing quite a bit headwinds in terms of demand growth. But this we believe is the temporary challenges. I think they have a very good long-term potential in terms of growth wise. QSR also from a very long-term perspective, they are looking quite attractive. Like that, we can find us small pockets of the value in the market, but broadly speaking, most sectors are on the slightly richly valued.
Okay, so that's a view coming in as far as the market mood is concerned, and the pockets which are still looking a bit interesting. But you know what, of course, cement as a pack has seen quite a bit of consolidation. This morning there was that news that Ambuja has taken over Orient Cement, or at least looking at acquiring stake in that one. We did get an exclusive chat with the management at CK Birla, Mr. Hariharan, talking about the rationale of the deal and what could be the prospect of the group going forward. Here out a slice of that conversation.
They want to expand, so obviously I'm expecting that the expansion plan that we are already started will continue in full swing. So there is obviously looking for value creation opportunities for them as well, and there is enough and more in the asset to do that. And with combining their capabilities, I think this is a great platform to build for the asset and for them as well. Our capital allocation strategy is to continue to invest in the businesses that I had mentioned already, and we have already been doing this over the last few years in terms of the investment. So if you see other businesses of the group, we have been both organically and inorganically growing both within and outside India. So this will only go to help us accelerate that strategy. We are a $3 billion group now. Our vision is to double that in the next 5 years, but more importantly, to triple value creation. I think we have done a good job so far over the last few years in terms of improving value, but the real opportunity is also moving forward. And we have an ambition of also expanding globally, and this will only help us accelerate that strategy as a group.
All right, so that's the exclusive conversation that we have with CK Birla Group. But Sampath, coming to you and talking about the cement space as a whole, because we've seen a lot of consolidation take place in that particular segment. You have the India Cements, now you have Orient Cement. How are you looking at the cement space as a whole fundamentally as well?
Just cement and as well as even other sectors, we have a great quality companies and most manufacturing companies, and also today a lot less leveraged. So in that sense, company fundamentals across the market are quite good. Even the growth potential is also quite good. It's just the valuation is a concern for the for the investors, I would think. So it's just that we need some amount of maybe time correction or a little bit of the acceleration in earnings we need to see. I think once that happens, again we could come back in a good growth path from a returns perspective. It is same is the case with cement sector also. I think the companies are good. The growth potential is quite good. Most companies are a lot less leveraged, I would say. Lot of companies are sitting in a cash with a healthy balance sheet. I think the concern is just only on the valuation side.
Valuation is a bit of a concern, and yes, that's the view coming in. Kunal, let me ask you about a couple of these result reactions that we are seeing. Paytm, of course, under pressure, and the other one that we are watching out for is Zomato. Would you recommend any positioning on that one ahead of the earnings?
So I think Paytm could be a decent bet, at least looking at the charts relatively, because the stock over the last 1 week, 10 days has been a lot more sideways. I think 675 approximately was the low the stock had made over the last 2 days or so. So I think at current levels, the risk reward could be a bit positive, but the markets have been such that if the results have been disappointing, we've seen the stocks getting punished quite severely. We've seen 10% to 15% correction also for stocks, even if it's a larger cap name. So I think one has to be wary of that kind of a data point. Zomato, the only concern for the charts when I look at it on a daily time frame is that the stock is now come back towards a previous major swing low, as well as broken below the 50-day moving average. So maybe there could be some bit of more pressure on the stock over the near term. I think only if we see a scale past about the 274 mark for Zomato, which is the previous swing high of the 50-day moving average, that could be a point where one could look to buy the stock.
Right, as you can see on your screen, markets now are at the day's lowest point. You only have two stocks on the Nifty that are gaining. That's ICICI Bank as well as Nestle. Nestle is just a tad bit shade of green at this point in time. You have the broader markets. That's the one that's actually seeing sharper cuts when you compare it to the benchmark indices. You have broader markets that are seeing cuts in excess of about 2%. That's for your mid-cap index, and your small-cap index is seeing cuts of about 3.6% at this point in time. Naresh, coming to you, I wanted to understand what's your view coming in on all of these metal counters, because you saw all of them rally in sync with what was exactly happening in China with the entire stimulus blitz. But that sort of a recovery or sort of a rally has now taken a back seat.
So in terms of metals, the preference continues to remain for the aluminium stocks, given the fact that base aluminium prices are holding up well. So you have aluminium prices sustaining about the 2,500 to 2,600 mark for the last many weeks. Then you have alumina, which has crossed into 630 mark. So out there, Nalco and Hindalco remain buy on dips. In terms of steel, we are seeing varied movements across the board. So would wait it out over there. Tata Steel, given that it is corrected well, could be the only bet where the risk reward is in favor. But I would still go with Hindalco and Nalco as the only play.
Okay, point taken. Thanks so much for joining us today, Sampath, with that quick take on the markets. But in the meantime, before we head into the break, let me take the top, trades coming in from our chartists. Kunal, what's the recommendation? Is there any trade or just stay away from the markets right now?
I think, frankly, I think it should be a no trade zone. But just looking at the strength from the banking stocks, ICICI Bank is something which still looks sturdy. The last 6-7 days, the stock has been holding on to the key support of 1230 to 1235. So I think that could be a trailing stop loss for short-term traders. And I think at current levels, the stock has been extremely strong in the private sector banking names. So we'll go with a buy stance on ICICI Bank.
All right, so that's the take coming in on ICICI Bank, given the fact that it is holding, the only one that's holding fort at this point in time when you talk on Nifty. Naresh, what's your closing trade?
So again, a defensive bet which has been holding on, that is Dr. Reddy's around this 70, 66, 80 mark. Looks like a case where it could eventually break out.
Break out. Let's see if that's the word we can use today or not, because otherwise it's a breakdown that we have at our hands, and we are staring at a 1% cut on the Nifty, just around the 24,500. And if the next 30 minutes pan out the way the rest of the day has, we are in for the volatile 30 minutes. In fact, we're at 24,510, slipping into a short break, hoping that we'll stay above 500 when we come back.
Welcome back. You're watching Closing Trades right here on ET now, and it's been a pretty dull day coming in for the markets. While we were slipping into a break, we were just hoping that we don't break past below that 24,500 mark, and that's the level that we're testing at this point in time. But Kunal, how are the charts looking to you actually for the broader markets in particular, because the pain over there is pretty sharp? You have the small cap index that's seen a downtick of about 3.5%, in excess of 3.5% right now. How are the charts looking for both of these counters?
Yeah, of course, I think the charts for both the small cap and the mid cap index are, of course, not at the best of their times, because I think we've managed to come back towards a multi-month low. I think maybe if we close at this current level, say 18,100 odd for the Nifty small cap index and 56,000 approximately for the Nifty mid cap index, we could be at a multi-month low in terms of closing as well for these indices. This doesn't of course gel well with the overall market theme, because we've been seeing this market getting into a sharp correction the first week of the month of October, then a mild pause where we saw a bounce coming into the index, in the second round of sell-off which has come back again into the indices. In the last 2 days specifically, the Nifty's managed to erase some 450 odd points broadly from 24,900 mark towards 24,500 where we are trading right now. So this indicates that the market breadth as well as the pain in the large cap names is still one of the major concerns. The only solace I think which could probably happen when these indices come back to retest their long-term moving averages. So they are still, I think, a couple of percentage points away from their respective 200-day moving averages. Maybe that could be a point where we may see the selling intensity getting a bit more abated.
Let's see whether the selling intensity abates or not. For now, there's no stopping that. We are below the mark of 24,500. So what, almost 1,500 points from the highs that we had made, or more than that actually?
1750 approximately.
So we did go around on 26,200
200.
thereabouts. Yeah, so 1,700 points. Though it hasn't happened in a hurry, for what it's worth, there has been a lot of days of consolidation and sideways move that we had seen. But at one point of time, 25,000 had become a bit of a floor for the market. From there, it was about 24,700, 800 level, and there were a lot of days we were very range bound. Finally, we have broken out of that range. It's not looking pretty on the screen, almost a 300 points cut coming in as far as the market is concerned. Let's take a look at which are the ones of the major contributors on the downside. It's Reliance, which is contributing 35 points on the downside. It's down about 1.5%. M&M is taking 8 under pressure, 3.2% lower. L&T, SBI, TCS, these are some of the other names. Having said that, you are not seeing that, the market mood is not very obvious with the kind of Nifty move, because it's actually much deeper when it comes to the broader markets, and that is where you're seeing the actual pressure. The market cap erosion has been higher than 7-8 lakh crore rupees. Just in a matter of a day. On the losing side, it's Garden Reach, which is down 13%, Mazgaon Dock 10% lower. There are a couple of these other defense companies which are coming under pressure as well. The likes of BDL, BML, etc. will come up for you on the screen. Not just that, a few of these real estate names are unwinding. So Aditya Birla Real Estate, for that matter, Amber, which had shot up 10-12% or actually 20% by end of the day yesterday, is giving up gains, 10% lower today. L&T Finance, 361, BKG, Jindal Stainless, some of these names which had run up considerably are all getting undone today. Naresh, what's the view on PSU as a pack? At what level will you be a buyer in PSU Banks and PSU Defense?
So PSU banks could now get closer to a entry point, because we've seen a sharp correction in the whole sector, and as well as in particular small cap names. So something like a PNB has gone down from 140 all the way to 98 odd levels. So out here, say it goes to 90, it becomes a buy. 750, you have SBI, which becomes a buy. So a lot of these stocks have now come to. So if you look at the PSU Bank Index, closer to 6,000 is where it started in terms of momentum in the last move. So 6,000 is a price point which I would be watching out for on the PSU Bank Index. But a lot of these names could now come into a good bottoming out zone going forward. So a Bank of Baroda comes down to 200, 220 zone. That would be an interesting play. So another 5-8% in a lot of these names, and they become a buy.
So those are the names that one should watch out for as far as the broader market and the PSU pack is concerned, but getting quite ugly on the screen, because even good quality names from the broader markets, or at least the ones that we call good quality names, are also coming under pressure. So the entire space is down and out, whether it's a Blue Star, whether it's a Nippon Life AMC, whether it's some of the other names coming in from the broader markets like CDSL, BSC, etc. They're all down 5 to 6% in the trading session right now. Kunal, any line in the sand, anything to watch out for, anything that is giving you a bit of a hope of a reversal, or right now just book whatever losses / profits you have and just run away?
Yeah, I think that booking should have happened a couple of days back. That bounce which had materialized for the indices, that was one of the classic reasons, classic zones where one ideally should have lightened up the portfolio. I'm not saying to exit the entire portfolio, but I think lightening up of portfolio generally is always a healthy sign, because when you see the markets going into a selling spree, there are bound to be great opportunities which come back into either great valuations or great prices or great support zones, the way one is looking at. So I think we may probably be getting into that zone where over the next couple of days, once the sell-off, assuming if it intensifies over the next couple of days, I think we could be forming the bottom pretty quickly for the indices. And I think one of the best data points which I have looked at for the index over the last 20 years is that we've had maximum 5 consecutive weeks of the index going into a downtrend before there has been an immediate bounce back, and that bounce back has been quite strong. Only the cases where the index has fallen by more than 5 weeks consecutively have been those sell-off zones, or the zones like the COVID 2020, 2008, or the year 2000, 2001. So I think only on those zones is where we've managed to fall more than 5 consecutive weeks. So far we're on the 4th week for the index. So it's bound to be that the pace of correction could intensify over a very short term, but that could also offer some great interesting opportunities over the next few days maybe.
So it's gonna be an okay Diwali if that really happens, because there'll be green on the screen. Then from those lows we'll be able to bounce back. I think this is just creating that foundation for having a better Diwali, because if you were in the same range, we might have not seen a rally. Now at least there's that possibility, if at all.
There could be a possibility, yeah. So of course the Diwali is definitely dampened for many investors because the market's bouncing off from here towards 25,500 is the chances are very, very bleak for the indices. So, but I always believe that such signs of correction were due for the index. We were discussing this I think 2-3 months back also, that the markets were getting into a bit of a frothy zone. And this is the fifth instance, if I am not wrong, that in the last 5 or 6 months that we've seen correction of more than 5% or 5 to 6% broadly for the index. So I think the month of March is where we started off seeing that first phase of 5% correction, followed by elections, then closer to budget, August, September. I think we've seen those zones where the indices have corrected by 4-5% broadly. The data also is very interesting in terms of trivia, that the last or at the same time last year, we were going through that similar kind of a sell-off. 26th of October 2023 is where we formed a bottom on the index that was just 1% higher than the 200-day moving average, and from there we started off a major bull market.
All right, so that's the take coming in on the market, some market insights coming in from Kunal, but we also have Mayuresh Joshi joining us on the show right now. A very good afternoon to you, Mayuresh. Not looking like a great afternoon when you look at the markets and the print on the screen. We are sub the 24,500 mark for the Nifty. Broader markets is where the pain is pretty sharp, and it's all the sectors that are in the negative territory, but one of the stock that is holding out in this sort of a market is ICICI Bank. While one end of the market, you have ICICI Bank that is holding on to the positive territory. You have IndusInd Bank that's hit a 52-week low on an intraday basis today. What's your take when you come up when you talk about the banking space as a whole then?
Afternoon. So two things. One, I think the numbers for most banks, specifically the larger ones, have been pretty good. Axis Bank gave a good set of numbers. HDFC Bank, good set of numbers, and the commentary was equally encouraging. Kotak had their one misses in the numbers itself, so quite a few one-offs in the numbers. Expectations that as rate cut cycle starts in India as well, some element of positivity expected to come through. So I think the larger banks have delivered. In fact, the mid-cap banks have also delivered. Karur Vysya Bank has given a good set of numbers. City Union Bank yesterday has given a good set of numbers, and a few of the PSU banks have given a good set of numbers as well. So again, I think the entire apprehension that was surrounding the BFSI space in terms of how deposits will grow, whether there will be incremental pressures in terms of asset quality, whether there will be compression on NIMs and spreads, that has largely not happened, at least in Q2 numbers. And commentaries seem to be pretty sanguine when it probably comes to the second half and the next financial year as well. So again, selectively, a clutch of these large and mid-cap banks is something that can continue doing well, looking at how the results have played out. Obviously, I think with the rate cut scenario, how deposit mobilization takes place is going to be extremely critical over the next couple of quarters, to say the least. But a large part of the banking universe is well capitalized, asset quality pressures under control, provisioning has been done adequately onto the balance sheet, and therefore additional stress coming through seems minimal. The expectations in terms of NIMs compressing significantly seems minimal at this juncture, and valuations and price action probably remain in their favor. So yeah, I think we continue holding banks like an Axis, an ICICI, a Karur, a Bank of Baroda, a Bank of Maharashtra in our global portfolio.
Okay, so some of the banking names have come out with better earnings. Numbers for SRF just hitting the screen, and as far as the revenue from operations is concerned, it's very sideways. 3,424 is the consolidated revenue from operations, and that compares with 3,464 that they delivered last quarter. The profitability this quarter has actually dipped. It's 201 crore that they've reported versus 252 crore last quarter. So there seems to be a bit of an operational miss coming in, because this is despite the other income staying steady at 33 crore versus 25 crore. So there has been a jump up in other income, but overall the profitability has come down. The taxes have also actually gone down, the tax expense. So there's a clear miss when it comes to the operating performance, and that's the reason that stock is coming under pressure right now. So revenue down about 1.2% quarter on quarter. It's the profitability which is lower, and those are the red bars emerging on SRF. No surprise with the kind of market mood that is. And of course, we have seen very, very sharp reactions to any negative earnings. In fact, Mayuresh, FMCG has the pack, has reported weaker than expected earnings, whether it was Nestle for that matter, whether it has been a couple of other companies, DMart, etc. as well. Having said that, Varun Beverages today is holding up. In fact, in an otherwise weak market, that stock had taken a bit of a knock when the numbers had come from, but from there it has been inching higher at the highest point of the day. Have you looked at Varun Beverages specifically?
Afternoon, Anisha. Yeah, specifically, yes. And I think if you look at the numbers and the internals, they are pretty strong. So if you look at the 9-month comparison for this financial year, obviously take the calendar year into consideration. For 9 months calendar year, FY25, 24 and FY23, they've already done around 909 million cases, India and their overseas operations combined. For the entire periodicity, they will exceed the numbers that they did last year. Margins have been very, very stable at 24 odd percent, and they might stay in this range of 24 to 25. The expectations in terms of debt equity staying stable at 0.6 by 0.7 also seems to be a plausible base case scenario, because I think a large part of their capex has largely been done. The mix between their products, carbonated drinks at around 65, 70 odd percent. You've got water, which is around 25. And then you've got your health drinks, including juices, at around 5 odd percent. So I think they've got a very healthy mix. The expectations in terms of volume growth should continue remaining extremely strong. Obviously, the depots that they probably manage, the own fleet that they've probably got at 2,500 odd units, that augurs well in terms of the entire internals, in terms of how they manage their operations. And therefore, it's been a very strong show. I think they have been continuing to do this, Anisha, over the last few quarters. And this quarter has been no less. Yeah. So anybody holding should continue holding Varun Beverages.
All right. So anyone holding Varun Beverages, continue holding this particular counter. There's another stock actually that would like to pull up. It's the Avenue Supermart. That particular counter is holding on to gains in otherwise weak market today, while the rest of the market is just caving in. There you go, Avenue Supermart just holding the fort, just in that positive territory, about 0.7% or so. Yesterday we spoke to Milind Karmarkar, who spoke about Avenue Supermart and Trent in particular, who believe that both of these counters or both of these companies were still in their youth phase. There is scope for further upside on both of these counters going ahead. In fact, let's hear out what Milind Karmarkar had to say in that exclusive interview with us.
When you are looking at these businesses over a longer period of time, like I was just some time back, I was looking at Trend. So from 2002-3 to 2007-8, it went up 10 times. But it was not the greatest stock during that time, because we had Voltas going up 60 times and all the engineering stocks going up 60-70 times. Now 2007 to 2010, it again grew by about 50%. But from 2010 to 2016, it did not go anywhere. It gave a return of CAGR of, if I'm not mistaken, about 8-9%, which was significantly lower than the market. So you have to, so in any business, there is a, if you see, there is a life cycle. So initially, it's initial phase like a startup. Then there is a growth phase. Then people start realizing that, oh, this business is likely to do well. Money starts pouring in case they don't want money. But as long as the business keeps innovating, I think the growth will continue. But of course, it's life cycle. So at a time, it will sort of mature and start delivering big cash flows, but low growth. And then, like most of the FMCG companies, that's what has happened, that they are delivering large cash flows, but less growth. And then for now, that phase can continue for a long period of time. And after that, it's a demise. So I think that is what happens for each business. So nothing different. So ideally, you should be invested when the growth phase is there and continue to hold till you think that the business is mature.
All right, so that's Milind Karmarkar's take coming in on Avenue Supermart as well as Trent. And also he did say the fact that he expects the brick and mortar traditional retail operators to actually coexist along with quick commerce space. And what's your take, Mayuresh? Do you concur with that view that despite the way how quick commerce is taking the market by the storm, the brick and mortar players will continue to survive and thrive?
Yes, they would. And I think the entire concept, as they call it, physical and digital, I think a combination of both these aspects are extremely critical for a growing economy like India. Obviously, I think everybody's got access to data at this juncture, but a large part of the Indian consumer market still resides in tier 3, tier 4 cities and rural areas as well. And therefore, I think the touch and feel option that still persists in a lot of regions within the hinterland will still continue. Obviously, I think a lot of these players, whether you talk about FMCG companies, whether you talk about paint companies, whether you're talking about the banking universe also, I think a lot of the consumer discretionary sections of the market are expanding their direct reach. They also have a mix of e-commerce. They are having a mix of digital. I think a lot of urban consumers prefer digital and digitalization in terms of all these facilities that are probably given out to them. And therefore, I think an appropriate mix is absolutely necessary. Take instance of the banking system also. HDFC Bank has been adding physical branches continuously over the last few quarters. And I think that is where the differentiating factor probably becomes. Have low employees or less employees probably kept in, use digitalization to probably ensure your operating costs become optimal. But I think this model will survive in an economy like India.
Taken. Mayuresh, where else are you finding value on the table? You talked about some of the private, banking names like Axis, etc., which you have in the portfolio. Anywhere else that you would use this opportunity to buy on dips?
So, Anisha, again, I think we are constantly monitoring. I think a lot of these ancillary players. So, real estate ancillary stocks is something where our belief is there can be a decent amount of volume stroke price growth as well. So I think the entire operating leverage thesis should play out meaningfully in terms of stability of earnings over the next few quarters. So Greenply Industries is one stock which we probably kept on our radar. Obviously, it's corrected with the market today, but it should show some element of price strength coming back. And as that happens and earnings support that, I think that can be a good, credible story going forward. Obviously, I think a lot of these domestic cyclicals is something that we're keeping on our radar as well. Cement as a subsector, you've seen one acquisition probably happen today, but there's a lot of consolidation happening within the industry itself. Expectations in terms of stability of pricing should remain a monitorable constant. And as this scenario improves with growing demand and input costs remaining stable, a lot of the captive power being used internally or being created internally reduces a lot of internal and input costs for a lot of these cement players as well. And therefore, operating leverage should start picking up very, very meaningfully. So I think apart from Ultratech, JK Cement, Ambuja is something that we've kept on our radar as well. Last but not the least, I think a few of these infra companies as well. So our own sense is that selectively the Welspun Group, as an example, they are into roads, they're probably into waste and water management, they are into the gas pipeline business, both Welspun Corp and Welspun Enterprises as an example. They can continue doing well with good order books coming their way. They are executing well. The expectation in terms of working capital cycle and debt levels remain in control. And therefore, this entire thesis of earnings remaining constant for a few infra companies, cement companies, a few of the real estate ancillaries probably are some of good areas where earnings stability can continue remaining stable and strong.
The view coming in as far as the market is concerned, and the Welspun Group, which you like at this point of time, at least select names from that. But overall, it's Zomato for which we're expecting the numbers to come by. Paytm had come out earlier in the day. It was operationally okay, but Zomato is down. Actually, it's seen a bit of a spike in the last few minutes, and it's been volatile because the numbers are expected any time now, and just ahead of that, there is a bit of a volatility. We'll take it across to Snehi to get more sense as to what the expectations are from the number. But before that, let me take it across to Ansh to get better understanding of what's happening in the market, because it's the broader markets which are reeling under pressure. Any insights there, Ansh, from the market texture?
Right, so both mid-cap and small-cap has actually touched its 2-month low today. But if you see on monthly chart, on monthly basis, then starting with mid-cap first, mid-cap is down by around 6.5% for the month, and it has formed a bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. Also, index has snapped its 6-month gaining streak, and this is the biggest single monthly decline in at least 2 months. Now, if we talk about a monthly basis, then there are almost 85 out of 100 stocks are trading in red in the mid-cap index. If we talk about top losers, then we are seeing that IGL, L&T Finance are down by more than 20%, whereas MRPL, Vodafone Idea and Bank of Maharashtra are down by 18 to 19% on monthly basis. Now, if we talk about small cap index, then like mid-cap index, small cap index has also been declining for second consecutive month, and it is down by around 5%, actually more than 5% on monthly basis. And if you talk about top losers for small cap index, then we are seeing Manappuram Finance, HFCL, Mahanagar Gas, NBCC and IFCI, which are down by more than 15% on monthly basis.
All right, so that's the broader market performance coming in. But Kunal, I would like to ask you everyone's favorite question now. What next for Reliance Industries? Because it's more closer to its 52-week low than it is closer to its 52-week high level.
Yeah, and I think the last 1 week or 10 days has been quite brutal for the stock, because what it has done is in the process of this 300 to 400 point odd correction from 3100 mark, which started off for Reliance from the second half of the month of September. I think the stock has managed to give two major breakdowns, and on technical front. One is of course the break below its 200 moving average that happened, I think the last day of the month of September, the first day of the month of October for the stock, when it managed to break below the 2900 mark. So that's one critical data point. We've seen historically that whenever the stock has managed to break below the long-term averages, and that too with a gap down opening, and that gap has not been filled, it's acted as a zone of major resistance for the stock to come by for months on a trot. And the second, the more critical part, is that the stock is now showing the incidence of a death crossover on the technical terms, which indicates that the 50 DMA has crossed below the 200-day moving average for Reliance Industries. Again, I think in both these cases, we've seen historically that the stock takes some time to try and form a major bottom for itself. But in the process of the stock forming a bottom, there could be a phase where the stock gets into a corrective or further corrective mode. So at least the good part is that the pace of correction, which was very intense in the first week of October, that pace is not getting replicated so far for the stock. But nevertheless, the downtrend or the initial or the move on the downside is still continuing for Reliance Industries. So maybe another 100-150 odd points correction for the stock could be in the offing in case if the market gets into a further leg of correction.
Further leg of correction, hopefully not. At least if you're a bull, that's the view coming in. But for now, we continue to drift lower. There's a bit of a recovery, very, very small one at that, but we'll take what we get at the moment. Let's see what we get from Zomato today. The numbers are expected anytime over the course of next couple of hours. Let me take it across to Snehi to get a sense as to what the expectation on the street is. Snehi.
If you take a look at what the street is penciling in, largely it's a good set of numbers that we're expecting for Q2 this time around. Let's take a look at these numbers on a consolidated sequential basis. Revenue is expected to grow at 10% QOQ. 4,681 crores is what we're expecting this figure to look like compared to 4,206 crores that we saw in the first quarter. EBITDA also expected to go up by 20% sequentially. 209 crore rupees is what we're expecting the EBITDA figure to come up to versus 177 crores. Now PAT, however, we're expecting to see only a 3% sequential growth on this front. PAT is being penciled in at 260 crore rupees compared to 253 crores in Q1. And the EBITDA margin also slight expansion is what we are seeing here at 4.5% compared to 4.2% in Q1. Now, here are some key expectations that we are penciling in for Zomato's numbers. Food delivery, the segment is likely to post 7% QOQ GOV growth. You have strong performance that's expected from Blinkit, because Blinkit is also expected to post 15% sequential GOV growth, and the sequential margin improvement can be expected to be seen in the food margin as well as the Blinkit business. Here are some key monitorables that we'll be watching out for keenly in tomorrow's results. Market share gain or loss in the food delivery business is going to be an important metric to watch out for. Order volume growth in the food delivery business is also going to be another important monitorable. Delivery charges expansion in the food delivery business will be a key monitorable, and near-term EBITDA trajectory will also be important to watch out tomorrow. However, when you shift focus to Blinkit, the net dark store addition for Blinkit is also going to be a very important metric to watch out for in tomorrow's management commentary. But well, yes, all in all, a good set of numbers is what we are expecting for Zomato tomorrow.
Okay, today is when we are expecting Zomato's numbers, so we'll watch out for that in the next couple of hours itself. For now, the stock volatile, and so is the case with the market as well. Fairly volatile at the moment. It continues to be the same names. Actually, PNB is down 7%, MRPL is down 7%, HEG, SJVN. So a lot of these PSU names are actually coming under pressure. Mayuresh, what's the view as far as PSU basket is concerned? Would you hazard a buy here, or let it settle, let the entire volatility get out of the system?
I think it would be an appropriate choice for the volatility to settle, Anisha. But I think PSU banks seem to be a little bit more comfortably placed. Numbers have been reasonable. The expectations, again, in terms of the legacy accounts that they probably carry, would ensure that the deposit growth continues for these banks. Again, well capitalized, a large part of the banking universe, specifically the larger names and the within the mid caps, the largest mid cap names as well. Last but not the least, because their provisioning has been so elevated, any write-offs and recoveries and the write-offs that they've probably done in the past, any recoveries thereof will incrementally add directly to the bottom line, which probably means that there might be a ROE improvement as we head into the next few years as well. EPS RS rating, institutional holding, as we see in CanSlim, remains very, very strong. So Bank of Baroda, Bank of Maharashtra seem to be well placed. Defense names, Anisha, I think they've corrected quite a bit. So I think we are keeping our eyes and ears open now. If they correct further, our own sense is that the tailwinds and the structural story still persists. They've got decent order books. They've been executing well. There does not seem to be the case that their execution might probably go off track, looking at the target setting that the ministry has probably given them. And therefore, I think we are very, very selective when we're keeping a very close eye on these PSU defense names. If they correct further and if they make good bases at lower levels, maybe we'll initiate coverage on a few of these names with management.
Yeah, it wouldn't be a bad idea to take this opportunity to initiate coverage on some of these names for now, being on the sidelines and tracking what's happening in the market very, very closely. That's all you can do, to be honest, in a market like this. You can't catch a bottom, and definitely it's not a good advice to try and trade in this kind of market where the volatility index has spiked on an intraday basis. Where are we on India VIX right now? I think we were above the mark of 14 the last time I looked at it. Right now we are very close to that 14.5 mark, so 5% higher as far as India VIX is concerned. And it's the broader markets which is coming under pressure. Let's pull up the mid-cap and small-cap indices yet again and see whether there has been a bit of a recovery there or not. No, not at all. The mid-cap index continues to be under pressure at the lowest point of the day. And look at the small-cap index, almost a 4% cut coming in on an intraday basis. Individual names and the list can actually go on of the losers. So why don't we start with the gainers, because there are only a handful of those. City Union Bank gets a thumbs up with the kind of result reaction coming in. Polymed is the other one with that 3% gain. Varun Beverages, the commentary from the con call seems to be liked by the street. Hindustan Zinc, Vinati Organics, Shree Cement and ICICI Bank. These are some of your top gainers from the overall market setup right now. On the losing side, GRSC, Amber Enterprises, Mazgaon Docks, Aditya Birla Real Estate. These are some of the names that you're watching out for on the downside today.
Absolutely, and a lot of stocks on the downside, like Anisha said, that you have Zomato numbers that will be hitting on your screen. And Zomato, let's see where that one is shutting shop. Is shutting shop lower by about 3.5% or so. The profit has come in much lower than what the street was anticipating for Zomato. They've approved a QIP of around 8,500 crore rupees. So let's see how the stock will react tomorrow. But if you talk about the banking players, then you have SBI that's under pressure, you have IndusInd that's under pressure, RBL Bank, all of them actually under pressure in trade today. Talking about the auto pack, you have the newest kid on the block, that's Hyundai Motor India. That one is seen a sharp downtick, 7% or 6% downtick coming in for Hyundai Motor India. Also, you have M&M, Maruti that's under pressure in trade today. But yes, Anisha, Zomato numbers below the street estimates, is it?
I wouldn't call it that. I mean, the total income has come in at around 5,020 crores in terms of the overall number coming in, and versus around 4,442 crore that we saw last quarter. There isn't any exceptional item, but the profit for the year seems to be a bit depleted at the moment. I'm looking at the consolidated numbers right now. It's throwing up a number of almost 237 crore. Sorry, that's a profit before tax number, but profit for the period is 176 crore, and that compares with 253 crore rupees that we had seen last quarter. Last year, of course, this number was a bit lower. Last year, this number was 36 crore. So from there, we have jumped up to 176 crore. Not a big element of other income, not a big element of exceptional item right now, but there is an other expense that seems to have shot up a bit. So the other expenses have gone up to 830 crores versus 677 crore that we had seen in the quarter gone by, and last year this number was around 530 crores. So ET Now poll had thrown up a number of profitability of 260 crore. The actual profitability has come in at 176 crore. That seems to be coming in from the fact that the other expenses have gone up, because I don't see any other material miss, at least at the first look. So overall, that's the pain point. We'll have to try and dissect this number a bit more. And of course, the shareholder letter that comes out later, that tells you the breakup in terms of what Blinkit is going to be like, what's the other internal and what's the way forward. But you can watch all of that after this very short break as we carry forward the news break on ET Now on the other side.